you've got to understand there's many various scenarios that can play out in a situation. It's not like anything's ever guaranteed in the market. Oh, we're going to have a guaranteed recession or not a recession. What I see time and time again where people really mess up is they think anything's guaranteed in the market. There's a range of scenarios that can play out, a range of scenarios. I took playing poker serious for a while, and that was one of the best changes of my thought process, because when you learn how to play poker on a high level, you really realize there's a range of scenarios and you need to kind of do the math and the numbers around all these different scenarios that can play out. Same exact thing in the market. Where people get really messed up in the market is they think like something's guaranteed. We're guaranteed to have a recession, not have a recession. And they start making these judgment decisions. Build out a great portfolio, 10, 20 stocks, GVD, growth, value, dividends. You want to throw the cherry on top, hedge your portfolio properly, and that's the hedge. That's the little cherry on top, okay, in the scenario. You've got to be you've got to position yourself where you can survive a bad market and you can thrive and really get that insane upside in an upward market, right? And so that's just so dang vital, and that's a very overlooked thing in the market, in my opinion. It's a range of scenarios. You want to bet on just one thing happening, you're doing this game wrong, in my personal opinion. So I have heard a lot of excitement talk around bonds recently, okay? But this is so important. Everybody watching this video understands exactly what she's saying here, okay? Exactly what she's saying, because this is so important. Because if you're maybe newer to the market, you might assume she's saying like cash is a very dangerous place to be, so you have to be all invested in the market. It's not at all what she's saying. What she's actually saying is, in this market, you need to have, if you have money somewhere, it needs to be in a savings account yielding you 4 to 5%, or it needs to be in a treasury yielding you 4 to 5%. You can't just have it sitting there earning you nothing. That's a dangerous place to be, and especially in a time period of inflation where your money's getting eaten, right? This is a great opportunity to, if you got $30,000 on the sideline, right, not invested, why is that money not in a savings account, earning you 4 to 5% right now? There's a massive amount of them. Maybe it's not JP Morgan and Bank of America and Wells Fargo, because those ones are still giving joke rates, but there's a lot that are, right? Why is it not in treasuries? And that's food for thought, right? That's a very, very important point. Why is it so hard to get the market down? Okay, like why is it so dang difficult to get this market to, go down 20% or whatever, okay? There's actually 3 reasons, okay? First reason is she didn't bring up, I'll just bring this up because it's worth mentioning, okay? First reason is because many of the biggest companies that have the biggest weights on the market have been cost cutting in a major way, and are going to see their profitability go to the moon, a la Meta, a la Amazon, and many of the most important companies in the world. So you're going to actually see their EPS and net income expand rapidly as the next several quarters happen, okay? That wasn't a point she made. I just think that's worth mentioning. A point she made there, talking about $800 billion going to, basically outflowing into cash, right? At some point in time, I can tell you a good portion of that money's got to end up back up in the market. And so I can tell you any major dips, if the market does get any major dips this year, is going to find its way back in the market, right? Because people can't be on the sidelines forever, especially with their money always being eaten, okay? The second point, and this is, in my opinion, even more important, okay? This is the most important point in regards to this, okay? And what she was just saying is, think about it in this context. If somebody put their money in treasuries, right? So they sold out in 2022, which had a year of, massive selling, right? So somebody takes $10 million out of the market, they put it into treasuries. Well, they're earning 5% on their money. When their money comes back to the market, whenever it does, right? They're returning with $10,500,000. It's going to be even a bigger number, right? And so these are important things to remember, and this is one of just many reasons why it's hard to really get this market down. Meta stock. So Meta just climbed over a 100% gain for us now in the public account, okay? 101%, $226,000, okay? Now, in regards to Palantir, what price would I sell Palantir at today? What price would Palantir stock need to be today for me to sell out of that stock? Palantir today would need to be about $40 a share for me to say, okay, I'll sell all my shares today. $40, okay? In regards to Meta, you got to understand, Meta's still early in this move, okay? This stock is likely going to climb a whole lot more, and here's why, okay? Here's the deal. Meta's trading at a forward P as far as next year earnings go, okay, of about 17. 17? Here's the deal. Analyst numbers are too low as far as EPS estimates. I think Meta's going to blow those numbers away. Just wait till the next 3 quarters, and you see the net income, you see the EPS, and you see the operating income this company posts over this next, I would say 3 quarters, specifically the third quarter and fourth quarter. It's going to be shocking. Analysts are going to be blown out of their seats, okay? And what they're going to do is they're going to have to bring up this number to likely $15, $16, or $17 for next year's earnings, okay? Which means the 4P is even lower. Now, even if this number was accurate, which once again I think is very low, basically Meta's a steal deal. Steal deal. It's trading at 17, 24 times. I mean, that doesn't even make sense. This stock should easily be trading at 25 to 35 times 2024 numbers. So here's the deal. Don't be surprised at all if Meta's $300+ this year. Don't be surprised if it's $350+ this year, regardless of what happens in the indexes. Do not be surprised at all, because the stock is so significantly underpriced right now. And I think that's something that needs to be taken into account. So when you see, oh my gosh, there's so much money being made here, just got to understand, this is early. This is early move, Meta. We got a long way to go in this one, baby. And I mean a long way to go. I mean, early days there, okay? Shopify. So this is interesting, right? I saw Kathy Wood. It looks like she's either sold out of all her Shopify stock now, or she sold out of almost all of it, okay? And it's interesting, right? So Shopify stock that's done very well. I own it in the Patreon portfolio. Obviously, the dollar amount is really small because the Patreon portfolio in general is really small. I just started, in January? And so we're up to a few $1,000s in there. And the Patreon portfolio will build out into a 5-figure and 6-figure account over time, but it's small numbers we're working with now. Look at the percentage gain I have on Shopify. 57%. 57%, right? Now, you might think, maybe that is a good opportunity to sell, but I think Shopify is maybe the most confusing, understood stock in the stock market right now, okay, or misunderstood, okay? And here's what I'm looking at with Shopify. You look at face value on Shopify and you're like, geez, the stock seems so expensive. 36 analysts cover the stock for 2024 numbers, 122 forward P, that seems so high, right? I think Shopify is about to put on the most shocking next 12 to 18 months of any public company over the next 12 to 18 months. Because what I'm looking at with Shopify, with the cuts they've done in their employee force and are going through right now, and the getting out of those logistics businesses and whatnot, like Deliver, what I'm looking like with Shopify is I think you're going to see this company built into an absolute cash flow and profit machine. The likes that we haven't seen in a long, long time in regards to Shopify, if ever. And I don't think analysts have even really factored that in nearly enough. And so what I think is going to likely play out specifically, it'll start in the third quarter. It won't really start in the second quarter because they're going to have a bunch of one-time costs that really hit them and things like that. It'll really start in the third quarter and fourth quarter, in my opinion, is you're going to see their net income absolutely fly to the moon, and the EPS as well. The margins are going to start to expand rapidly, and these analysts are going to realize, oh my gosh, our margin estimates are far off. Our operating income numbers are far off. Our net income numbers are far off, and we're going to have to start bringing up numbers substantially. And so Shopify looks like it's trading incredibly expensive right now. But I can just tell you, in my opinion, I don't think the stock's trading actually very expensive. I think you're going to see that play out, and the numbers are going to be pretty shocking over this next, specifically after we get over the second quarter and we get into the third quarter, fourth quarter of this year, okay? And so that's why Shopify, for me right now, is kind of more of a hold. It's not like I'm necessarily looking to buy more Shopify shares. I might here and there, but it's not like it's a real buy for me. But I'm also not going to sell a stock that they just completely changed their entire business model. And the changes they just made in their business model is going to make this company exponentially more profitable than any Shopify we've ever seen, ever, okay? And so, that's an interesting one to play out there.